Governor, Ministers, distinguished guests, ladies and gentlemen, can I add my personal welcome to this midwinter dinner held in partnership with the Bank of England. I think it's a great way to commence the Northern Irish business calendar this year. I would like to thank our principal sponsor, Electricity, and their Managing Director, Stephen Wheeler, for helping to make tonight a success. Stephen, it is great and very encouraging to see the investment that you've made in Northern Ireland. I understand it's around 400 million to date, and it's great to see that, and we wish you very well. As ever, we have a range of guests with whom we work with closely during the year, and they're very welcome. But of course, I'm particularly honoured to welcome Sir Mervyn King, Governor of the Bank of England, and I'm delighted that he has chosen Belfast to deliver one of his last public addresses as Governor. Governor, you're very welcome, and I look forward to introducing you later. In terms of the background to tonight, one of the 5 key priorities that I headlined and outlined when I took the chairmanship over was to build better awareness around the whole area of access to finance, and to work with our executive, our banks and our businesses to identify key issues, but more importantly, practical solutions. I think there's too much white noise out there and not enough practical solutions as to what we can do to make things better. Some recent developments are encouraging, but significant challenges remain. The revisions to the Basel III banking reforms announced earlier this month as to both the liquidity requirements and the delaying of bringing in these measures are very welcome. But there is no doubt that these reforms long-term will still have a significant effect on how banking is conducted in the UK. They include the unprecedented level of non-financial corporate debt that's going to mature in Europe over the next 5 to 10 years, estimated at $11.5 trillion, and the long-term effects of what are unique issues in Northern Ireland around the property boom, and you can start to see some of the challenges that we have to deal with. As a small regional part of the UK, where a vast majority of our businesses are SMEs, it's imperative that we, as a business organisation, working with the executive, working with our businesses and our banks, get to grips with what the new funding landscape will look like and start planning for the mid-term. So what do we believe needs to be done? Initially, I believe there are 5 key things that if we actioned over the course of the next 12 months or sooner would make a huge difference. The first is to make sure that those of our banks who are still working through the pre-qualification process with the Bank of England on the new funding for lending scheme get through this process quickly. Some of our banks are already through this scheme, through the pre-qualification, and are now leveraging the scheme successfully. However, the majority of our operating banks in Northern Ireland are still on the runway and being cleared for take-off. Because of the limited number of banks we have in Northern Ireland, the longer this process takes will have a disproportionate effect on us, perhaps more so than in other regions. Governor, any assistance the Bank of England can provide to get the rest of our banks through this process quickly would be greatly appreciated. Secondly, once through this process, our banks and business organisations such as the CBI must build awareness of the scheme and the opportunities available under it. As importantly, we would urge our banks to show a real appetite to use this scheme for SME lending, and that's SME in a Northern Irish sense, not necessarily a GB sense. As the January Bank of England report shows that the funding for lending scheme is beginning to make an impact in Great Britain. However, weaker supply and perhaps demand for finance among SMEs show that work remains to be done here. Raising awareness of this scheme and the appetite to lend to SMEs will be crucial for our economy. In addition, if our banks were to leverage the scheme into, for example, the first-time house buyer market, this would boost our housing market and assist our construction industry. This is already happening in GB, and it would be great to see it happen in Northern Ireland. Thirdly, our executive, our banks and other stakeholders need to work together to coordinate a long-term finance strategy for Northern Ireland. While work on this has already started, and I would pay tribute to the efforts of Sammy Wilson, Arlene Foster and Simon Hamilton in this regard, there remains much more work to be done. The work of the Credit Review Office and the Irish Banking Federation in the Republic are great examples of what can be done. In the Republic, much more detailed information on current lending behaviours goes direct to the local policy makers so that they can react to it in real time. Such measures, if were to be adopted here, would help our executive formulate the right policies and critically at the right time. As a regional devolved government, it is of course more difficult to get access to this type of information, but I believe working constructively with the banks and the Bank of England to get this information more regularly and in more detail to our executive will allow them to devise economic policy more easily and hopefully more accurately in the mid-term. Other examples that the Banking Federation in Ireland have worked on, the implementation of standard form business plans and loan applications by all banks for SMEs. I think that sends a really positive signal to businesses that banks are there to work with them and to make the loan application process easier. The new initiative announced by InvestNI as to finance vouchers to assist SMEs when trying to raise finance is a step in the right direction, but more needs to be done. Fourthly, our executive needs to set aside more cash for the different types of funding needed for growth companies, particularly where it's these types of growth companies for whom conventional bank funding can only play a part. The InvestNI Access to Finance strategy has some very sound structures in place. However, the current £100 million being made available over 6 years is not enough. The structures are good, but the executive needs to find a way to release more funds into structures like these, either directly itself or in partnership with others, such as the European Investment Bank. One only needs to compare this to the recent announcement by the National Pension Fund Scheme in the Republic of Ireland, which is effectively the Irish Public Sector Pension Fund, of a €500 million commitment to invest in growth funds. This is on top of the several hundreds of millions of euros that the Irish Government, in conjunction with Irish banks, have and continue to commit in this space. While we cannot be expected to match this pound for euro, the gap is still significant. The CBI believes that the economic strategy under the programme for government is essentially sound. However, if we want SMEs to focus on R&D and on exports, then we must focus on how and if SMEs can sustain the long-term working capital they need to fund these types of initiatives. We need to ensure we have a funding strategy that complements our economic strategy. Lastly, while I believe the funding for lending scheme will have a significant and positive impact this year in Northern Ireland, there will remain a significant number of companies here that will, because of issues such as their balance sheet and or scale, will prevent them from joining it and getting involved in it. In the past, other national solutions, such as the Enterprise Finance Guarantee Scheme, did not get widespread traction in Northern Ireland, primarily because of the scale of our SMEs. As a result, we would encourage our executive to consider localised solutions that are market and scale specific and work with banks and understand what is marketable and what is workable, and then take these to Westminster and hopefully to the Bank of England as well. The challenges are clear, but the bottom line is that if some or all of those steps were to be implemented relatively quickly, we could see a real difference in economic activity this year. I believe that this year is a turning point. I believe our main customer bases, such as GB, such as US, will see recovery this year. As a result, I believe that the businesses that take the plunge this year and invest this year and are able to take advantages of some or all of the schemes we have discussed will look back and think they did smart business in 5 years' time. It is incumbent on the CBI to build awareness and confidence, but also not just to highlight the problems, but to front up and provide practical solutions and alternative sources of finance that may not have been considered to date, and work with the executive and work with our banks in a constructive way to improve access to finance. We commit to doing precisely this over the next 12 months. Thank you very much for listening and enjoy your meal.